only to rub elbows with us, ask a lot of questions from all the instructors while you're there, but also with our power users. There's going to be dozens of people who have been with VectorVest, as long as I have, which is awesome. And you might ask the question, get this off my chest here early too. Well, why do they keep coming back? Is it so difficult to learn and all this? That's not why they come. They come for a couple of reasons. Has been the consensus. I've asked the questions over the years, why you guys keep coming every year? They like to recharge their batteries. They like to spend time with one another, recharge their batteries, refocus, get ready for the next year. And they said, Steve, I tell you, sometimes, I learned some things that I think I probably should have learned the first time I went, on the second or third time I come. So it's just an opportunity. It's an opportunity to get ready for the upcoming year. It's an opportunity to mingle with people, like-minded people who want to make the most of the upcoming year and learn about the best ways VectorVest knows how to do that. So that's really the huge benefit. Yeah, obviously the benefit for attending virtually is simply you could do it from anywhere. The beach, some exotic beach out in the wherever it is, that's great too. So whatever you decide to do, obviously I'm fine with. But I do truly believe there's significant benefits to attending live. And we might talk and discuss a few more as they come to mind as we go. And then just a quick note on that front, there is going to be a special offer at the end. Attending virtually is going to still be free. But if you decide to come, you do get a significant discount for sticking around to the end to get a link to get you all signed up. So something to wait for, certainly, if you're already interested or if you're going to get the opportunity to become interested, as this webcast probably only going to be about 30 minutes or so, okay? Because we're not going to be discussing technique or anything. We're just going to give you a taste of what's there. And you can see the speakers, the primary speakers on the slide here, but also two very special guests. Stan Heller is going to be there talking about the latest developments with the NPI, Near Perfect Indicator. And Les Masonson is going to make his debut. Published author, very accomplished trader and investor. And he's going to be talking about the ETF landscape and getting everybody primed up and ready for all the new developments that have been happening there and make sure we're all ready to go for next year. So it's going to be great. All-star cast. All right, let's get to it. So first things first, we've kind of already discussed this a bit already. However, why not add a little bit more color around it? Why go? Why attend the event, either live or virtually? Well, for many of us, the answer is pretty simple. It's secure our financial future in the best way possible, and that's know how to do it. So whether it's put the kids through school or retire comfortably, whatever your current objective set is, it's the opportunity to learn how to get that done with proven track record plans that will get you there. And so that's really what this is all about. It's about showing you guys how to thrive with the information that we provide so that you can live your life on your own terms and not ever have to worry about anything ever again is our primary focus. And what we want to see is get you into situations like this. This is a model portfolio that we've been showing at this event for the better part of the last 8 or 9 years, really, but made it certainly more of a central focus over the last several. And it's dynamite. It's on S&P 500 caliber stocks. And boy, I tell you, the performance here is phenomenal. And minimal drawdowns, unless you go kind of 2022 was a really tough year on a lot of folks. About the only thing that was clicking along then was energy, when the energy was booming. Oil prices were skyrocketing and so forth. But, it put a lot of pressure on stocks and that kind of thing. So the drawdowns have really come on the most inopportune times to be in the market. COVID, fuel crunches, things like that. Otherwise, this thing just clicks right along. And so the problem, however, for a lot of us is we get so lost in trying to figure everything out. We get buried by all this data, all these newsletters, all these TV personalities, all these water cooler discussions with coworkers or friends. And, before you know it, we forget the basics. Just keep it simple. Keep it simple, someone. I like that. I like that final S better than the traditional final S that people like to say. But yeah, keep it simple, someone is a better way, I think, to to talk about that one. But that's really the essence of what it's all about, is keeping it simple. And that is the right message. Eliminating all of the data and focusing on what is useful. And that's a much smaller set of data that really means anything, right? And so we do a good job at this event on helping you focus based on who you are as an individual and focusing on what's going to matter the most for you. And we're making a bigger deal about that this year than we ever have before. Just finished up the slides, and I'm super excited. I think you guys are going to love it. So the big mistake, we've kind of already implied this, but it's making things too complicated. And so this whole event is about decomplicating everything. Keeping it simple, like we just said. So that's the fix. The fix is to focus on simple, proven plans, and then our ability to stick to it is often what's going to provide the best outcomes. So no matter how good a proven plan is, if we're not careful, we might lose a little bit of faith in a system or something over a period of time, give up on it, and boy, I tell you, just about the time lots of folks make that critical decision, it's at about the worst time they could do that, So it's inspiring you to stick with these plans. These are plans that make money year in, year out, and otherwise we wouldn't talk about them, But keeping it simple. People have shown me all kinds of crazy stuff over the years. And I'm sorry, I apologize if I didn't introduce myself. My name is Steve Chappell, Director of Trading Systems Development here. Been here 22 years, 23, I think now, actually. And it's been quite a ride. I've met a lot of interesting folks over the years. One fellow showed me he owned 102 stocks, and we had to kind of start working on that problem. And, all the way to these exotic, 20-page documents on plans that they want me to go through, make sure that they're not. I said, look, the first thing you got to do is decomplicate this stuff. You're getting yourself buried in a soup, of things. And so all we really need to know are simple ways to figure out when it's the right time to buy stocks for us as an individual. And that can be a unique, perspective. Some of us are more aggressive, some of us are more conservative, and a lot of it's driven by how much money we have deployed in the stock market, and how much we're willing to risk and all of those kinds of things. But we've got a solution there for everyone, and we clearly illustrate that at the event. And number two is then, I tell you, this is the bigger part of the risk analysis asset or assessment, is the kinds of stocks you pick. I would say that has a much bigger impact on your trading than any timing model that you might consider. In other words, you can make a very conservative timing model very risky by picking speculative stocks, for example. Stocks that don't have proven track records, that latest, like quantum stocks right now. They don't have a lot of earnings, but they're going through the roof, And that can be great for short bursts and for traders and things, but it's something that can really get longer term investors in a little bit of trouble if you're not willing to sit through tons of volatility and all that kind of stuff. So we just help better pinpoint the right attributes in VectorVest for you. So we got to help you understand who you are, right? And then better pinpoint the kinds of stocks that are going to be best served in your particular portfolio. And then how to manage it in just minutes a day. Not sitting up at night anguishing over the charts and what did they say this little pattern here means and all this kind of stuff. It could be far, far simpler than that. Really can. Okay. So when we talk about when it's the right time to buy, there's going to be people who are going to really want to try to pinpoint these market turning points because they realize that that's where a lot of the action is. And it truly is. The first week or two is where stocks on a robust basis, on a broad swath, really move. And then as rallies continue, it kind of narrows in on the cream of the crop. And there's others that, hey, look, all I'm interested in is being a little, moving the needle a little bit every year. I'm happy with 10, 15% a year, and I'm always going to want to be in the cream of the crop stock. So I'm willing to give up trying to nail these turning points for a little bit more assured signal. That's gonna be not as susceptible to false signal, for example, and on the way in and on the way out. So there's going to be early indications to get out of harm's way for a lot more of the trader mindset, and then there's going to be more significant events that are best suited for more retirement-minded portfolios. And, it might be situations where you just decide to Katie bar the door by use of options. So we do a good bit of that kind of training on the retirement side of things at this event. So it may not be even situations where you end up selling anything at all, more so than just kind of protect what you have, So don't think of these as necessarily in and out exits all the time. They're just, hey, market looks great, time to be buying, or hey, look, market's really begun to turn over here, so we need to take a lot of preventative and protective actions to mitigate potential looming downside that might, if we're not careful, really ruin things for us. So we help identify what signals are best for what types of applications while you're at the show. I'm not going to get into all the rules and all the systems here. I mean, that's what the event is for, But these are dates of actual signals. It kind of gives you a little bit of a feel and a flavor of things, okay? Now, in terms of what are the best stocks for you, it really comes down to good stocks sets you up for better management in the future, better outcomes, not having to be as involved on a day-to-day basis with the kinds of stocks that you hold and that kind of thing. So Dr. DeLito said it best. Good portfolio management starts with buying the right stocks. It absolutely does. So we make a big deal about that. And what we do is we try to teach you a little bit about investment styles. There's 4 quadrants that we break that out into. We're going to give you suggested templates of either scans or searches to run for the right kinds of stocks for you, or complete systems. So you can kind of make the use of that in your own way while you're there. But we're definitely going to give you ample information based on who you are to make the right decisions on the stocks you're buying. And so really what it comes down to us is just balancing these 2 indicators. And this is not, graphic is not meant to be taken literally. You can see that it says greater than 1, for example, on a 0 to 2 scale. It doesn't mean that you're happy with stocks that have 1.01 and that's all you're shooting for. Think of it as what you're placing your emphasis on, okay? So, we're going to go a lot more depth in what that might mean at the show, but just realize for now, like if I'm a prudent investor, top left quadrant, I want the highest combinations of those numbers that I can find in the software to really be picking the best stocks for me. Stocks that can not only go up the page, but do so with a lot of safety because they have proven earnings track records, okay? And the highest combinations of earnings growth and earnings track record is what you're after there. Whereas aggressive, they're willing to give up some safety because they want stocks that can move up the page even faster, right? So in order to do that, you've got to give up a little bit of safety and really focus in on the growth engine. For example, the growth engine is what creates the magic over the short bursts, particularly if there isn't as much safety, believe it or not. Right? So they're willing to take on more risk to try to go up the page quicker. See? Conservative, the whole emphasis is on track record. That's all that matters. Preservation of what I have, and you'd be surprised just because stocks sometimes have relative values less than 1 doesn't mean that they can't also go up the page. It's just that's not the primary focal point. The primary focal point is these companies just make money quarter after quarter after quarter, year after year after year, and that's what they do best, And then speculative, you just kind of throw everything caution to the wind, and you're willing to buy all these things that all these YouTubers and things are pushing on their websites just because it's the latest greatest thing. It's got AI in the name, So. Yeah, you can hit some home runs there from time to time, but what do you do most of the time? You end up striking out, even if you get off to a good start, because you buy into all the hype and all the stuff, and before you know it, you're underwater. So we spend a lot of time working off of that grid at this show, more so this year than ever, as we try to put every technique and every tactic that we teach into one of those quadrants so that you have a better understanding of what you're dealing with, okay? In terms of number 3, just management, keep it simple there. We're going to show we have our own unique way to go about thinking about managing all of these different portfolios, and each one of them has a proven methodology specific to that particular endeavor. So the stops aren't consistent across the board. They're going to have to vary in order to help you achieve what your goal is, right? Aggressive stops are going to be a little bit looser, oddly enough, to enable stocks to actually get to the profits you're trying to achieve. It's an interesting thing. You would kind of intuitively think that you'd want to tighten stops, but what ends up happening is you inevitably cut loose all your big winners too soon when you do that. So anyway, those kinds of aha moments when you see the evidence happen at this show. Okay, and then finally, just kind of learning from the experts. So the really great thing VectorVest has done here for the past year and a half, if you somehow don't know about it already, is once you've identified who you are, what kind of proven plan you want to follow, there is a room with an instructor in it from VectorVest that has been here almost as long as I have, and I think at just about every case, which is great at this point. And, we're able to keep you focused on your specific proven plan on a day-by-day basis. So we're going to make a big deal about getting involved in our community, and the community that is specific to you. And some of you, that might be all of them, actually. And for some of you, it's going to be, particularly if you're brand new, you probably just want to stick to one for now. Let's master that one. And then if you want to add options in, or you want to have a little bit of fun trading now that my prudent plan is on autopilot, then you kind of move and get yourself into the next community as well. And you kind of balance that accordingly, right? But what you don't want to do is try to do them all right out of the gate without having any experience whatsoever. That is a recipe for disaster, right? So we'll spend a good deal of time talking about that and important stuff, real important. So if you're a more successful investor, you're going to be focusing in on great stocks that have good, strong earnings and proven track records, because they're the ones that are most likely to keep climbing up the page. All you do is really focus on this earnings down here at the bottom. And as long as you come in here once a week, every week, and it's still climbing, that's the engine that drives the stock prices up the page, okay? And it's not just how well they've done this quarter or, even what their guidance is for the next. It's looking at the last 12 years and extrapolating what the consensus forward estimates are and figuring out what the actual future earnings should look like. So nothing is taken at face value. This earnings number down here, a lot of folks don't understand how well thought out that actually is. It's your lifeblood. If you're somebody who's just after 15-20% a year, that's all you got to do is just focus on great stocks like this that have the beautifulest earnings patterns down there at the bottom, because that's not just how good earnings are now. That's that final data point there on the bottom right. That's where they're going to be a year from now. So all of this coming year, the intention is they're going to continue to hit higher earnings numbers all the way through. So if you come in here every week, you're always looking a year ahead. And whether you knew it or not already, see, here I go. I'm going to start teaching. But that's how really good investors think, right? It's not so much you got to kind of peel back everything and say, all right, how well have they done this, right? So that means we're even more likely to continue to do it in the future, okay? All right, so there's that. Then there's going to be a swing trading approach. I need to update this graphic, I think. Last number I heard from Jerry, that he's going to be showing a couple of tactics that has gotten him to nearly 50% real trades through real APIs, through real brokerages, right, just this year. And by golly, 1 month later, he's up almost another 10%. So you're gonna learn, if you're more of a swing trader, you're going to learn some awesome swing trading tactics while you're there, a couple of them. And of course, there's always more to learn, but we're going to show you a couple of the best, okay? And then there's going to be other stuff talked about there too. Can't let all the cats out of the bag, but we're going to have 4 other complete plans that are going to be shown while you're there, particularly the afternoon of the first day. So here's what it looks like. I'm not going to go through every talk and bore everyone to death. I'm just going to say this. The morning is all about successful investor. I mean, that's what it's really about. We're taking a different approach to it, one that we think is more creative and will hit home with more folks, particularly those that are brandy new. So we've done some more creative titling and kind of framed out the discussion a little bit differently, but it's still really successful investor. Okay, that's what it's all about, helping you better understand that approach. Afternoon of day one is more specialized. So we're going to do a lot with ETFs and also specialized plans. 4 different plans, as a matter of fact, that can really move the needle for you, depending on who you are as an investor in that final talk. We also have, we have surprises every year. So this year is scheduled to be no different. That's all I can say at this time. Can't say anything else. But if things go according to plan, should again be the best one yet. I think it's going to blow people away. Morning of day 2 is retirement services and getting into swing trading, essentially. And a couple of very clever ways to do that. One through Jerry and also through Stan with the near perfect indicator. And then also in the final afternoon, the main focus here, after we get all the way through options and everything, how to supercharge, profits with options on elevating your swing trading and so forth. Then it's about making sure you understand what you've learned. First, who you are, what you've learned as it pertains to who you are, and what you do Monday. And by Monday, the day following the show, the first trading day following the show. What's my plan of attack? Okay, great. This all makes sense. Got it. What do I do Monday? And what can I also do to make sure that I stay on track? Right, and I don't make any mistakes. So we will set that record straight before you get going. Okay, I think that's the most important part. Well, it's not true. You got to learn who you are and what you should do first. But then this is the most important part, certainly at that stage. What do I do Monday? So old Abe Lincoln said this: if I had 6 hours to chop down a tree, I'd spend the first 4 hours sharpening my axe. How does that pertain to what we talked about today, Steve? Well, I'm about to tell you. If I were you, I would spend the first 2 days of next year that I could, the earliest 2 days I could, to make the most of the rest of my lifetime. And I'd rather do 2 days from a lifetime, at least I hope, than I would 4 hours for 2, sharpening an axe. You know what I mean? So it's an even sweeter deal. All you got to do is get there. We don't care how. I don't care if you go in live and in person or if you do it virtually. I really don't. I would prefer that you go live. And I've already mentioned some reasons why. Okay. Another thing that just comes to mind is you're going to be a lot more serious, if you get there and, you're there, right? You have to immerse yourself in it. And believe me when I say all the other subscribers that are there are not going to let you not immerse yourself in it. You're going to be immersed. So it's just a better environment. It's just a better learning environment, guys. Get there live if you can. Get yourself a good tax person. You can write most of this off, if not all of it, if you get the right people. So I would do that. I would do that, or at the end of the day, it's $95 to go. So your plane tickets. Look, we're gonna feed you too, which is crazy. The food costs more than the admission fee. I think the food the first day probably costs more than the admission fee. And then you should see what they're charging for internet services, for like the kind of bandwidth that we need to go worldwide for this thing. And it's just ridiculous. Here's the deal. We know that if we give you a price that you simply cannot refuse, all right, if we get you there, we got you, because you're going to learn what you need to learn to make money. And it's that simple. That's our model. We're not the service that puts another couple of zeros behind that and try to get you that way. Way we try to get you is just get you learned, get you trained. And if you sit back and think about that for a second, that's a much better way to go. You can't get the kind of training you're going to get at this event anywhere even remotely close to that number. Not even within the same stratosphere. So I would go. And here's an even better one. It's free, which is just, I don't know how they can afford to pay us all. I'm being serious. So do it. Whether you go to live or stream, it is an offer you cannot refuse. Okay? Sorry. I think I watched Goodfellas a couple of nights ago, and that's sitting with me somehow. All right. So VectorVest.com/Tampa or VectorVest.com/stream. And so in the chat, I will put this out to all the folks on GoToWebinar right now. You guys on YouTube, you know what to do. Listen, get there live if you can. That one is VectorVest.com/Tampa. Or if you can't go live for whatever reason, then VectorVest.com/stream. Okay, either way. And let us get you trained up. Let us take the first 2 days that is humanly possible for us to teach you how to take advantage of the rest of your life. That's my promise to you. And so far, so good. I haven't had anybody disappointed yet, ever. And I've been teaching this event 21 of the last 23 years. I can say that with 100% certainty. Okay? Get there. All you got to do is get there. Either way. I don't care which way. Just get there. See you guys. I don't see any questions. So I'm going to take that as you got the message loud and clear. A few people are saying that they're going. That's great. But I see some familiar names, which is also good. Get down there. Don't slip up. Don't slip up this year. Keep her going. We'll see you soon, guys. Good luck, okay? Good luck out there. We'll see you soon. Good luck.